Joining me now is Jason Horn from Steyn Capital Management to share his analysis on the day's markets performance. Jason, thanks so much for your time this afternoon. Now, there doesn't seem to be much panic in markets ahead of that July 9th deadline, especially as we don't know what could possibly happen once post that deadline. I want to pose a question to you that I asked one of my analysts yesterday. Jason, are investors just applying taco trading at this point? Do we think nothing's going to happen post July 9th?
It would appear that there is some complacency out there. Mm-hmm. I mean, if we looked at how markets have ripped, the reality is when this 90-day pause on these tariffs came into effect, we were told by the administration that they were going to seek to get 90 deals across the line in 90 days.
Yeah.
That's been long forgotten. Mm-hmm. And the reality is we've probably only got 2 and a bit in terms of deals so far. So, yeah, I think markets certainly not gearing up for tariffs to be put back on, but I suspect that could very well be the case next week on July 9th.
So we're crossing fingers and toes that he does somewhat pull back. But I want to talk about some of the deals we've seen coming through. Yesterday, we saw that US-Vietnam deal coming through. We know the Trump administration has a deal with the UK, has somewhat of a deal with China, and India says they'll be signing a deal soon. Do you think we've gotten to a point where the Trump administration has perhaps gotten a blueprint when it comes to these trade deals, and that we could possibly see more trade deals coming through soon?
I think certainly we will start to see some more communication for those deals coming through over the next week or so. Scott Bessent last week did indicate that they've been in advanced talks with at least 15 countries, big trading partners, to get deals over the line, and these will start to flow through. As I alluded to earlier, I think it's important to note that, yes, they have been frantically negotiating with some of their biggest partners. And I think Vietnam is one of those where they've taken a look and said, well, okay, this is our third largest trade deficit of $122 billion, only behind Mexico and China. And let's try get this over the line. And to be quite frank, Vietnam is a country that doesn't have any leverage on the US either. So yes, they've gone from paying 46% from the Liberation Day tariff, and they've agreed to 20%, which one mustn't forget that is double what the current 10% tariff baseline tariff is. So all this means is, yes, it's an amazing trade deal for the US. However, the unintended consequence is going to be an inflationary impact of some sort, as the tariff itself is double what the current baseline tariff is.
And that made me start thinking about how that will also just filter through to companies that have production hubs in Vietnam, and that how that plays out in margins as well. Surely we're going to maybe get updated forecasts as we head into our next round of earnings.
Yes, absolutely. I think if you look at Vietnam specifically, they've been a big beneficiary of this China Plus One strategy. So that's where companies are looking to, from back in 2016, diversify their supply chain risk around China. And Vietnam has been this big beneficiary, hence why the US has targeted getting this deal over the line. And yes, to your point, margins could come under pressure. I guess the real question now is, to what extent will these companies be able to pass on these tariff rates directly to the consumer, or are they going to wear it themselves, where we will then, if they do that, we will see an impact on margins.
All right, let's move on to other pressing economic news. Yesterday, we got the ADP figures showing that the U.S. shed 33,000 jobs in the private sector in June. Later today, we'll be getting an even clearer picture as the non-farm payrolls report is due. And let's expect the labor market to continue to moderate. What are your expectations?
Yeah, I think I've been saying this for quite a while now. I mean, if we look at, if we look at the soft data, so the survey data over the last 3-4 months, it's been very difficult for corporates, particularly in the US, to make these capital allocation decisions, hiring decisions with so much uncertainty, tariff on, tariff off, what's going to happen. So what we are starting to see now is, yes, the expectations looking forward have been softer, but we haven't quite seen that in the hard data, so the actual numbers coming through. And now what we are starting to see is that starting to filter through into the labor market. I think if you look at the labor market, a very strong labor market, real wage growth will have an inflationary impact. So I guess from the Fed's perspective, from an inflation point of view, as at the margin, the labor market starts to soften, that is actually not too bad for the Fed. So from our expectations, yes, the labor market's been okay. It hasn't been fantastic in the US, but it's definitely starting to cool. And even if that number comes out in line with expectations today, we are going to see the unemployment rate tick up.
All right, let's look at some local company news. Reinet confirming that it is in talks to potentially dispose of its shares in the UK's Pension Insurance Corporation. What have you made of that potential move if it happens? Of course, we'll see Reinet having even more cash on its balance sheet following the disposal of its shares in BTI.
Yes, absolutely. Obviously, the announcement now finally providing some clarity on all the froth around the share price over the last week or so. Look, not a company we follow that closely at the moment, but yes, to your point, quite a lot of cash on that balance sheet at the moment.
All right, let's hit pause on the conversation, Jason. Before we move on to your stock pick, let's take a moment to touch on what your industry peers find interesting.
It's about dollar sell the rand, simply because I think that the dollar's come under enough pressure, and things will start to turn around. So second half, we get bored. Traders get bored. When they run gold up, they say, okay, it's enough. And that's why they switch to platinum. Historically, and Skulk, and that if you go, platinum was always more expensive than gold at a huge premium. And suddenly gold is 3 times platinum, and it's always been regarded as a precious metal. So I think there's that historical thing. It's the same as silver had a wonderful time. So I think we're going to go into a few months of kind of dollar picking up again, and gold and all of those coming down. That also means the equity market's going to kind of feel a bit of.
Yeah, I mean, this must be the first time I call ABSA. ABSA, it's just, they recently brought out the trading statement. I mean, the ROE has been increasing, looking at an ROE now close to 15%, but they're still sitting with a price to book of below 0.9 times. Now, when you look at the last 20 years average for ABSA, you had an average price to book of around about 1.5 times. So I'm not saying it's going to immediately go back to those levels. I'm just saying it's grossly undervalued. And when I can earn dividends more than what I can actually earn in terms of interest when I'm going to put my money in the money market at ABSA, that's usually a sign for me to say, I actually like this. So dividend yield of over 8%, PE ratio of 7 times. I think ABSA is looking much better.
So Skulk seeing value in ABSA and David betting on the dollar. Just your analysis on those stock picks.
Yeah, look, I must say, I agree with Skulk. ABSA is a really cheap bank with a recovering ROE, so what's not to like? And then, yes, to David's point on the dollar rand, I think, yes, while there is idiosyncratic risk around the rand, and more specifically the soap opera that is the GNU, but in the short term, you may be right. Tactically, maybe the dollar's sold off a bit too much at the moment, but if we honestly zoom out, and structurally, there are a lot of headwinds for the dollar over the coming years, and I'll probably take the other side of that trade to David. I mean, the structural tailwinds we're seeing for EM specifically are starting to pick up, and these don't typically last a couple of months. These cycles tend to last years. So while I'm not saying we're going to have a super weak dollar, we'll probably, in our view, see a weaker dollar going forward. And
just your reading on the dollar's safe haven appeal. It's been, a conversation that's been taking place lately, just on the back of how weak it's been this year, where we know that usually when tariffs come into effect, the dollar then strengthens.
Yes, I think specifically around the US, I mean, even just talking about the crisis we had in the Middle East, I mean, if you've got a hot war going on there, what will it take for the dollar to break out to the upside? So it has been a little bit of a head scratcher, but if you kind of dig beneath the surface and you start to think about the fiscal situation that the US is in, you look at every marginal dollar of investments globally, the US has taken the lion's share up until the last 6 months or so. So you're not necessarily seeing an unwind, but you're starting to see investors really just give pause for thought and kind of contemplate, is it worth still allocating so much of that additional marginal investment towards the US, given what's going on fiscally, given where valuations are in the US, and kind of the US as a debt issuer, kind of how reliable will they be going forward, given the fiscal situation we have going on and this critical point in time we are at with this big, beautiful bill about to be passed, and the additional trillions of dollars that's going to be added to be quite frank, that unsustainable deficit.
All right, so now let's get into your stock pick quickly. We've got about 30 seconds.
My stock pick is Indofood. They are an Indonesian investment holding company. Their flagship noodle brand is Indomie. They're the most chosen instant noodle brand in the world. They serve over 555 million customers, and they hold a 75% market share globally. So it's a fantastic business, trading at a 50% discount to the sum of its parts.
All right, Jason, thanks so much for your time and taking us through trade at midday. That was Jason Horn from Steyn Capital Management.